A buy limit order is like walking into a grocery store with a specific item and a specific price in mind, and you're willing to buy the item only if it is priced at or below your desired price. Whereas a sell limit order is like selling a used car. You tell the buyer how much you're willing to sell it for, and the buyer will either agree to that price or give you a counter offer. Keeping these examples in mind, let's understand the application of limit orders with an example of the stock market. Say you're interested in buying Apple stocks that are currently trading at $100 and you expect the stock price to go up from here. Now, because the stock prices are constantly fluctuating, it won't be possible for you to accurately know what price you will be able to buy them at. What if before you place your buy order, Apple share prices go up to 105, but you're only willing to buy the stock for $100? That is where we have a limit order to solve this problem. This type of order allows you to specify at what price would you like to buy the stock. If you are not willing to buy them at 105 and would like to buy them at 100 only, then one would place a limit order on Apple stock at $100. What would happen is that the buy order will be executed only if Apple share prices fall to $100 or below in the future. And this is very important to understand because let's say the prices only keep going higher and higher, then too bad too sad for you that you won't be able to profit from this rise because your limit order at $100 will not be completed. On the flip side, if Amazon shares are trading at $200 and you're willing to sell them, but only if you get $220 for them, then you can place a limit order at $220. In this case, your order would only be completed at this price. So if Amazon stock price falls to 150 in the future, then again, too bad too sad for you that you had the opportunity to sell them at a higher price at $200, but you were only willing to sell them at $220, and therefore you might now have to sell them at a lower price. One would basically place a buy limit order or a sell limit order when they are more concerned about the price they will pay or receive and less concerned about whether the order will be completed or not. And to solve the problem about orders not getting completed, individuals can use the market order instead of a limit order. You can watch this video to learn about how market order works. If you enjoyed this video, don't forget to like and subscribe to our channel for more helpful investment tips. Thank you for watching.